All right, have you filed your taxes yet, by the way? Now that you're back home?
Hey, that's
back
a whole
home in the States?
Story.
Okay, well, we got some help on the other side of this break. Some of the last-minute advice that you do not want to miss from our Karen Lee right after this. All right, for all the procrastinators out there, me included, the government is giving you an extra 2 days to file your taxes this year. Tax day is this Tuesday. Normally it's April 15th, but this time Tuesday, April 17th. And today in our weekly financial fix, we get advice for last-minute tax filers like me. Karen Lee is the author of It's Just Money. So why does it cause so many problems? Okay, money is tight for a lot of people. People sometimes are just nervous about doing their taxes. They don't want to hear that they're going to owe, etc. So give us some advice on last minute, procrastinators such as myself, to make sure you don't make any mistakes, to make sure you take care of all those deductibles that maybe you didn't think about.
And that's what this segment is really about, is some of the little known credits and deductions that people do tend to miss. And whether you're procrastinating or not, remember, if some of these apply to you and you've already filed, you can file an amended return.
Good.
So the first one, let's talk about if you've got children. We've got an education. Now, the first two are tax credits.
Okay.
Credits are better than deductions. Credits come right off the tax you've calculated you owe. A deduction just helps you lower your income to then calculate the tax you owe. Okay, so both of these
you
are
might be seeing this money back.
Credits, exactly. So for education, there is the American Opportunity Tax Credit, up to $2,500 less taxes you can pay.
Now, is that college level education?
It has to be first 4 years of college only, and it's phased out after you earn, if it's a married couple, $160,000 up to $180,000, it's gone.
Okay.
And for singles, it's $80,000 and phased out to $90,000. Okay. The second one for education is the Lifetime Learning Credit. That one is for, again, undergrad and graduate. $2,000 you can get back, phased out at $100,000 married, $50,000 for filing single. And then the second one of those was for people with younger children.
Yeah, child care.
Child care, kids under 13.
But not everyone gets that. There's a ceiling, right, of income? It's
an income ceiling. And you know what? This one's kind of complicated. So the main thing I wanted to do here is tell you that for one child, up to $3,000 you can get back. 2 children up to $6,000.
Wow.
It's a percentage of the expense, and the phase out affects that percentage.
Okay.
All right. So then let's go on to, there's a couple deductions that I'm starting to worry about people missing because of the way we handle money.
Yeah, maybe we can see that graphic again, because it sure does help to reinforce
charity.
the
Let's talk about charity and moving expenses. These two are deductions. That last one's an actual credit. So with charity, we all tend to remember when we write checks to charity. What about when you do service? If you travel, and I recently did
your volunteerism?
Not like the time, but the distance you travel, you can deduct 14 cents a mile. And if you spend money, if you're doing postage, if you're copying, all of that can be deducted.
Really?
And what I'm concerned about is that we're starting to see more of people automatically deducting from their checking account and using credit cards. So don't just look at your checkbook to get all your deductions.
20 seconds left.
Ooh, we got to move. Moving expenses, of course, if you've got a new job and it's more than 50 miles away from where your old job was, you can deduct all of that. But let's get to that retirement savers.
Yes.
If you are a low income earner, $28,250 for single, $56,500 for married, you can get up to $1,000 back if you have been contributing to an IRA or 401k. That's in addition to the deduction that you get for the deferral. Isn't that cool?
That is good.
I didn't even know about that one.
Great, avenues to take to try and get a little bit more money back. Credit, that is excellent.
That's right.
Karen Lee, you always have all the best advice. And I know one thing you want to remind people, you got to sign your returns.
You got to send them to the right address. You got to make your check payable to the United States Treasury, not the Internal Revenue Service. This year, what we found out is people are filing their returns and realizing that someone already filed under their tax ID. New form of identity theft, and we're going to talk about that next week.
Okay, look forward to that. Thanks so much, Karen Lee. Appreciate that. Happy tax filing day on Tuesday.
I know, my favorite thing.
All right, get more financial advice by reading Karen's book, It's Just Money. So why does it cause so many problems? Or reach Karen at KarenLeeandassociates.com.